Get in touch with a banking analyst. Just a while earlier, we heard the Finance Minister, Arun Jaitley, talking about how they will consider perhaps some more banking recapitalization. Vaibhav Jain of Angel Broking joins in. Vaibhav Agrawal joins in. Hi, Vaibhav. Afternoon. You know, the Finance Minister has touched upon and said that the government will look into the issue of capitalization of banks. So as of now, he's not confirmed anything, but perhaps we may hear some more from him. What, according to you, is the amount that we need for additional recapitalization compared to what's already in the budget, and how will this progress?
To start with an amount close to something like 30 to 35,000 crores. Spread out across the various PSU banks, could at least, bring their capital adequacy up from, currently very low levels for several of the banks. And of course, this would still be the first step, in terms of, apart from capital, of course, they need to restore the profitability, lending standards, and the management at the top as well. But yeah, at least this would be a first step if, an amount somewhere like 30 to 35,000 crores is looked at.
All right, Vaibhav, a systemic question then. The recapitalization, according to the Finance Ministry sources, will be done with banks with high performance. But don't you think the bank with lower performance have it more difficult to raise capital then?
Well, actually, our view on this is sort of matching with the, the current focus on performance-oriented infusion, because, we don't really want a situation again where an easy capital infusion by the promoter, the government, once again leads to aggressive lending and, lack of focus on margins, on credit standards, etc. So, this focus of, not having enough capital, and therefore having to rely on your own, retained earnings, that is a good discipline to enforce amongst banks. And we would actually hope that that is not really diluted. I mean, of course, these less capitalized banks do need capital, but their first step should be to bring in that discipline on profitability, rather than relying on the easy way out, which is government capital.
Vaibhav, 30 to 35,000 crore of recapitalization by the government is an ideal scenario. Last year as well, the government didn't fuse as much as they had committed. This year as well, the target, according to the budget, is less than 8,000 crore rupees. So what would be a realistic amount, and any particular banks that you would look more favorably, in light of recapitalization?
Well, we have to really see, what the government is, actually able to spare for the PSU banks. And again, vis-a-vis which banks could once again start looking favorable. It also depends on, at what, because various banks are currently trading well below book value. So there would also be a significant dilution of the book value, if the capital is infused at current prices. And, one has to look at post that, what is the situation on the price to book, etc., before really recommending. Otherwise, as of now, the ones which have shown good profitability, good asset quality relatively, like SBI, etc., in the recent quarters, I think those are the ones we would still continue to go for, rather than, speculating on this capitalization, impact on the weaker banks right now.
All right, Vaibhav. See, credit growth continues to be a problem for the industry. In fact, in FY15 as well, grew at sub 10% levels. How much of an incremental growth in credit would you see on the back of this recapitalization, which, according to a lot of estimates, it will be below the ideal situation?
Ultimately, credit demand would depend on how the economy revives and how investment sentiment revives. And, like I was saying, we would hope that this capital infusion does not lead to some sort of aggressive base rate cuts and directed lending towards certain projects, etc. Because again, that kind of, increase in credit growth ultimately has not resulted in profitability for banks. Currently looking at the way the economy is growing, etc., we would expect an improvement compared to FY15 numbers, but, not more than around 13-14% year on year for FY16 as well.
All right, Vaibhav, thanks so much for taking the time out and joining in.